Hi, I'm Tyler Ballhorn. This is the Stockscores Market Minutes for February 6th, 2017. This week's Trade of the Week on ESPR. We'll cover that off at the end. But first, let's talk about this week's topic, hot stocks leave clues. As traders, we want to find the stocks that can go up much faster than the market. We call these alpha stocks. They're stocks trading on their own story. And almost all stocks that enjoy these market-beating trends start those trends in the same way. They begin by trading with abnormal price and volume activity, the signal that the crowd is being attracted to the stock, and it then perpetuates as more and more people come into that play. Now, I developed an indicator called the Stockscores Action Candle, which I utilize in TradeStation, but it's also part of the Stockscores market scan, at least on the daily interval, and it helps us to identify these stocks. So I'm going to go through 4 stocks that have been fairly hot lately, and the action candle is signaled by the pink dot. You can see at the bottom of that candle there is a pink dot. And why? Because the price action was abnormal and the volume was abnormal. Here's NAKD, a stock that I traded this week. Don't know anything about the company, but on the morning of February 2nd, when it started to trade abnormally, it triggered my action candle, and the stock went for a pretty good run over the next day and a half. Here's ESPR, which will be the stock we talk about at the end today, the trade of the week. And there again is the action candle. And look what happens following that action candle. Finally, dry ships. There was the action candle on January 30th, and it went for a big run before fizzling out. Now, I'm not here for the fizzle out phase. I'm entering down here and selling up in here when the action starts to lose steam. All right, well, let's get into this week's market analysis. Here is a 30-day, 60-minute chart of the S&P ETF, SPY. We had some weakness last week, and then we came back this most recent week, and we had a big jump on Friday after that jobs number, and we're basically right at resistance now. So short term, probably stall there, but the bottoms are rising. That's a sign of optimism. And so yes, we may come down into this zone, but ultimately I expect to see a breakout through resistance to new highs. Looking at the longer term weekly chart, you can see that we're just underneath that resistance. We've got long-term upward momentum. We are not too far or not too close to the top of the channel, so we still have upside potential. I expect this market to continue higher. The Russell 2000 ETF, it has come back fairly nicely. This is the daily chart, and you can see that we're still in this range. We need to break out of this range, but we're holding in it, and we had a nice price action on Friday. Ultimately, the small caps will do well when we can get a breakout through that 138 level, 139. Canadian market suffered a little bit this week, certainly didn't keep pace with the US market. You can see on the short-term chart here, we have some falling tops, and in sort of a pennant pattern. The direction of the breakout from the pennant will determine where we go. It was encouraging on Friday to see that little bit of action, but until we get a breakout from this pennant pattern, it's going to be tough to call. I lean towards seeing an upside breakout because the US market looks strong and it should keep pace. Now, looking at the longer term weekly chart, basically you've got a market that's been in an upward sloping channel for some time, and we had a little bit of weakness there, but we haven't broken the upward trend line. So it remains a bullish chart with just a slight bit of caution. I don't think it's a big deal, but we do want to make sure that that upward trend line does not get broken. On the TSX Venture, it's been coming up over the last 5 or 6 weeks. Probably going to get stuck up here around 850. A lot of this is because of the strength in gold, and I worry that that strength in gold may lose its momentum soon. We'll talk about that in a moment. Treasuries, still in a downward trend, which means interest rates rising, but we're also above support. So what you want to watch for here is, do we break down through this? That means interest rates are really going to go up. Or do we break the downward trend line, which means interest rates go back down again? I have no idea. Let's watch the chart and let it tell us what to do. US dollar, been weak over the last 5 or 6 weeks, but not really to be unexpected, I guess, because we had a market that has a trend line like this, and then it went steeper, and then it went steeper. That's the old parabolic trend. And when trends go parabolic, they will eventually pull back to one of those trend lines. It may pull back all the way to there before bouncing, but the longer term outlook is still positive for the US dollar. It's just suffering a little bit of profit taking after a sharp run. That's normal. Just like after you had this big run here, it spent the next 2 years going sideways as it reconciled that big gain. Well, this gain isn't as big, but basically it went up to the highs and got stuck after going parabolic. Totally normal. I expect we could see a little more weakness in the US dollar, but the long-term outlook remains positive for it. On the gold chart, we are at quite a critical point because, as I've talked about in previous weeks, we have this downward trend line here. We're just still a little below it. Obviously, we broke this one, and that was the parabolic move to the downside. It's now working its way back up to this upward trend line. We built a little rising bottom. We have resistance right there. So if it breaks out of this, where's it going to go? It's going to get stuck there. So I don't see considerable upside. Now, of course, it could break that, but my expectation is it will come up to that upward trend line, stall, and then we have to see, does it break to the upside, or does it ultimately fail the breakout and move back toward the lows? So it's a very critical point for gold right now. You want to keep a close eye on it, and I would say be a little bit cautious if you have some gold stocks because it could go either way. On the oil market, we're just stuck in this range. We've been stuck in this long-term sideways trading range for quite some time, but it's become a very narrow range with a tight pennant there. Watch for the breakout one way or the other to tell you where it's going to go. I lean toward it going to the upside, but it's like maybe a 60% chance of doing that and a 40% chance of breaking down. Again, watch for the break from that pennant. It will tell you what to do. Fear, every once in a while we get a little blip up in fear, but it rarely lasts. In fact, in the last few years, you've had these brief blips higher and then it goes nowhere. So one day it's going to actually go for a run, but it doesn't seem to be happening. The market seems pretty complacent. All right, so US stocks still bullish on both time frames. Canadian stocks bullish on both time frames, although a little bit more caution there. Gold neutral on both time frames. We're right at that critical point where it's going to turn one way or the other. I don't want to pick which way it's going to go until I see a break from that pattern. On the oil market, neutral both time frames. We've been in that trading range for a long time. We need to see a breakout of that range. The buyers showed more motivation this week, helping stocks make decent gains. Most importantly, there was better follow through and excitement, and that's something I really noticed this week. We had a few hot stocks where for most of January it was very quiet. Stocks now need to break out through to new highs, very close to that now. Gold is at a critical point, as I discussed, while oil continues to be stuck in its range. Fear remains low and rarely lasts long. All right, let's look at the trade of the week. I entered right there. Notice the pink dot, so we can use action candles on the 2-minute interval as well. And the other lines that I have drawn in here are the risk-reward lines. So what in this case, that was the entry, that was the stop, and it closed the day up 4-to-1 RR. And that's always how I judge my trades, looking at reward for risk using these risk-reward lines. You know, in this particular case, you risked about 42 cents a share to make over $1.60 a share. That's, you know, a pretty good trade. Not an outstanding one, but pretty good. And this is an example of one of those stocks that just had better follow through than we've seen through much of January. All right, well, that has been the Stockscores Market Minutes for February 6, 2016. Hope you liked the video. If so, please subscribe. Please click on the like button. We'll see you next week. Have a great week in the market and trade well.